Welcome to this week's look at the state of the New York City real estate market. This report is for the week of June 16th to the 22nd. We're going to be looking at what is going on in the New York City real estate market now that we are kind of moving quickly through June. We'll look at the luxury market, the Manhattan market, and the Brooklyn market. Then I'm going to wrap it up, give you some additional information to help you be successful, as well as some great strategies for success. There were 26 contracts signed in the luxury market last week. That is 11 fewer than the previous week. So, not sure what that means. We don't exactly know because the luxury market has been going pretty strong overall. And, this could just be a 1 week drop off. Hard to say. We'll continue to keep an eye on that. The number one contract was a townhouse at 11 West 12th Street. It was asking $27 million. It is a 5-story, 25-foot wide house. It has a little over 9,600 square feet. It includes 5 bedrooms and 6.5 bathrooms. It also has a 2-car garage, a large elevator, a movie theater, and a gym. Basically, what does that mean? You never have to leave your house. Or if you do leave your house, you never have to walk anywhere. You just drive wherever you want, come back, then park in your 2-car garage. The house is purportedly in excellent condition. It has a little over 2,400 square feet of outdoor space, including a garden, a 4th floor terrace, and a 5th floor rooftop terrace. The seller, incidentally, paid just under $20 million back in 2019. And the annual real estate taxes, if you're curious, are $97,477. The number 2 contract was 90W at 217 West 57th Street. It was asking $16.5 million. It was reduced from under $19 million when the building started marketing off of floor plans back in 2016. This is a condo. It has just under 3,100 square feet. It includes 3 bedrooms and 3.5 bathrooms. There is a living room and a dining area with 11-foot 7-inch ceilings, and those face Central Park. The unit is in Central Park Tower, a 1,550-foot tall skyscraper with 179 units and over 50,000 square feet of amenities, including indoor and outdoor pools, a fitness center, children's playroom, plus a ballroom, bar, dining facilities, and a cigar lounge. The total weekly asking price sales volume, $207,438,000. Average asking price, $7,978,385. Median asking price, $6,247,500. And the average discount from original ask to the last asking price, 3%. Average days on the market, 384. That's it for the luxury market for last week. We're going to continue to keep an eye, of course, on week to week on what is going on in the luxury market. It has been the strongest sector of the New York City market for quite a long time now. And, it too can have its ups and downs. So we're going to continue to keep an eye, see what happens with that as we move further into the summer months. We're going to take a look now, see what's going on in Manhattan and in Brooklyn. And the Manhattan market really is in full swing. The supply, both overall and weekly, remain very much on trend, seasonally speaking. The demand is also holding steady, but we did see a slight tick down. Contract signings are starting to move a bit sideways. We're kind of getting to that point in the spring market where we would expect to begin to see things taper off a little bit. We'll see the supply go down a bit. Perhaps we'll also see contract activity soften. So we'll go over the data now for Manhattan. And as always, if you have any questions, you can post those below or reach out to me directly at Sotheby's. The weekly supply in Manhattan for last week dropped about 6%. 285 properties came on the market. Contract signed 215 for the week. That is down 10%. The off-market properties, 166, also dropped about 3.5% for the week. The Monthly supply of new properties, 1,425. That is down a little over 29%. Contracts signed down about 11%, 967. And the off-market properties rose almost 54% at 709. The market pulse is kind of bouncing around down there in buyer's territory. As you can see from the chart, it was lower a few weeks ago, really further into buyer's market territory. Then it rose. Now it looks like it's just starting to go down a bit again. We'll have to see. And the liquidity pace chart, this 30-day moving window of contracts signed, 972. That is down 6% from last month and up 2% from last year. That's it for Manhattan for last week. We're going to now move over, take a look at what's going on in Brooklyn. And then, as I said, I'll wrap it up, give you some additional information to help you be successful in this market. The supply in Brooklyn is holding pretty steady, as you'll see from the data that I'm going to share with you. What we're starting to see, though, is that the contract activity is starting to look a little flat. Will Brooklyn and Manhattan start to slow down as we get closer to, let's say, July? Or because we were delayed a bit in this market really getting going, March, as I have mentioned, was pretty great for us, and it was a great start. Then April, because of the macroeconomic news, kind of sent buyers scurrying away. And then in May, they started to re-engage. June, we're kind of marching along here. Nothing really amazing about either one of these two sections of the market, meaning not a lot of differences between Manhattan and Brooklyn. We will see as we go along whether this is going to really continue to just till we kind of just sort of peter out for the summer. So it remains to be seen how far into the summer Manhattan and Brooklyn markets will continue to show signs of strength. So let's take a look at that Brooklyn supply for last week. It is down a little over 12% at 181 properties new that came to the market. Contract signed down almost 30%, 129. Off-market 84. That is actually up a little over 29%. The monthly look at supply in Brooklyn, that is down almost 26% at 879. Contract signed down around 4%, 652. And the off-market properties for the month up almost 10% at 277. The market pulse in Brooklyn shows a little more of a neutral market than Manhattan. We had dipped down into the buyers kind of section of the market, but now we are back up to kind of a more neutral place. The liquidity pace chart, a 30-day moving window of contracts signed, 652. That is down just under 1% from last month and up almost 13% from last year. Any questions about the Brooklyn market or the Manhattan market or the luxury market, just post those below or reach out to me directly at Sotheby's. I'm going to share some additional information with you, kind of more, let's call it market-wide or market conditions, as well as some additional strategies to help you if you are a buyer or a seller in this market that will help to ensure your success. So there were 26 contracts signed in the luxury market last week. That is 11 fewer than the previous week. 4 of those were in the trophy category, meaning they were priced at $10 million and above. 11 were condos, 5 were co-ops, 2 were condops, and 8 were townhouses. Interestingly, most of the contracts signed were downtown, 18 downtown, 8 uptown. As I mentioned, the Manhattan supply remains on trend and demand is holding relatively steady, maybe going a little sideways. In Brooklyn, the supply is also holding somewhat steady, but, declining a little bit. And the demand also kind of down this week and essentially pretty flat. In Manhattan, the total supply, 7,264. In Brooklyn, 3,557. Pending sales in Manhattan, 3,425. In Brooklyn, 2,246. Off-market properties, Manhattan, 3,373, Brooklyn 1,643. The average days on market, Manhattan 65, Brooklyn 47. And as I mentioned, the liquidity pace, this 30-day moving window of contract signed, Manhattan 972 and Brooklyn 652. You can see from the mortgage chart that the rates are remaining basically the same. We're not seeing many changes with that, just slight fluctuations here and there. No real expectation for the rates to go down anytime soon. Buyers are basically working with what is currently in place. And, if that works for you, great, because there are some good opportunities right now for buyers, which I will get into. But for the moment, let's just say the mortgage interest rates are holding steady. Okay, I'm going to share two charts with you. Continuation of that look at what's going on in the rental market in Manhattan and Brooklyn since we began the new FAIR Act. A lot of people are asking me, what does all of this mean, this FAIR Act? And is that going to have an impact on the rental prices? So the median price in Manhattan for new rentals is still coming in at about 12% higher than it was pre-FAIR Act. The last couple of days, interestingly, have shown a little bit of a downtick to the pre-FAIR levels. It's probably too soon to call this, meaning we don't know whether the prices are going to be higher or whether they're going to lower. We don't know which way they're going. It's just way too early to see what the impact of this act will be on the rental prices and therefore on the people trying to rent properties here. It will play a part. I mean, we do know that this does change things in terms of the economics. So we're going to keep tracking this to help you make decisions about whether you think it's better for you to rent or to buy. Brooklyn, the median price for new rentals is still roughly 4% higher than it was before the FAIR Act. But again, really too early to know how this act will play into the market dynamics for both Brooklyn and Manhattan. In the meantime, I will continue to report on this because I do think that it is a big change and it is causing people to, ask a lot of questions. And as they are doing the math as to whether it is better for them to, let's say, continue renting or perhaps better time now for them to buy, given the new realities, hopefully the information will help them be successful. As I mentioned, there are some good opportunities for buyers right now. Certainly if you're a cash buyer or the mortgage interest rates are rates that you can work with. There's a fair amount of inventory, not an overabundance. As you can see, it's pretty balanced, perhaps more so in Brooklyn than in Manhattan. But for buyers, you do have more choices now. If you see properties that have been on the market for a while, you will likely have a little more leverage there. Again, this rising cost of renting, at least for the moment, it might be a good opportunity for you to buy something so that the money stays with you, stays in your pocket, and you're not just kind of throwing it away every month. Okay, sellers, for the moment, buyers are still in the market. Depending on your circumstance, if you really want to get your deal done before we really start to slow down in the summer, now is the time for you to be making those price adjustments, especially if you've been on the market for, let's say, 30 days or more. Absolutely be making those price adjustments to attract the buyers that are in the market so that you can get your deal done before we head into the summer slowdown. If you've just come on the market, let's say you've been on the market a few weeks and you're getting some traffic, some interest, some maybe even second showings, but you're not really getting offers yet. And it doesn't seem like the buyers are enthusiastically stepping up and making offers. You may also want to consider making a price adjustment You might think it's a little early in the process if you've only been on for a couple of weeks, but we know a lot in those first couple of weeks. That is when, in the eyes of the buyers, you are worth the most to them. And it is when buyers are paying the most attention to your property. So again, we have a few weeks likely left of a solid spring market. If you want to get your deal done and you are a seller and you are not getting the traffic you want or the offers that you want, adjust your price. And remember, the asking price is not the selling price. If it is meant to go higher, it will. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.